I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, it appears people are now jumping on the Vancouver housing market correction bandwagon, but I recall 2 years ago, you were talking about it, you were bang on. Why did it take them 2 years to catch on to what you knew was reality?
Well, this is something that has gone on for a long period of time, Jim. The housing market, as we said in your show over and over again, all of the metrics that are used to measure the housing market that you read in the newspapers, you read on websites, what economists use, what academics use, those housing metrics are all latent measures of the housing market, meaning they're measuring what was going on in the housing market months or years before. They're not actually measuring what's going on today. When those metrics were created, like average selling price, benchmark price, sales to new listings ratio, inventory in the market, all of those different days of inventory, all of those different metrics were created with the sole purpose of selling houses, selling them for the highest price possible in the shortest period of time. That is the sole reason those metrics were created. That means they were created to measure what was going on at this moment. What's going on at this moment actually is predicated on what took place in the market months and years in advance. So when we called the housing correction in British Columbia in the fall of 2016 on your show, our metrics, the metrics that we use to measure a housing market, were already recording the change that was taking place in the market that subsequently, years and months later, gets reported as real estate stats. Since your listeners can only access real estate stats, in other words, the metrics that I just discussed, they are always looking at the market through that lens. We're not. So we use metrics like days owned between trades. Now, we use that metric because it tells us how what share of buyers are buying in a market at any given moment in time. So in other words, if a whole bunch of first-time buyers who've never owned a house before are jumping into the market, days owned between trades is going to shorten, okay, because they haven't owned a house before. That means your house price gains are going to be lower. Those lower prices are simply because the share of first-time buyers is higher. They're buying cheaper houses. Whether it's the average selling price or the benchmark price or an HPI, which all simply reproduce average selling price, that's what's being measured. When those first-time buyers enter the market, and the numbers that they're entering the market at tells you how long a real estate market can survive before sales start to fall. And you have to measure that as well. So when these people now are starting to agree, you're going to start hearing agreeing between analysts, realtors, academics, economists. You're going to all hear them start to agree that there's a housing correction going on in British Columbia. Well, what they're reporting on now is what they're seeing today which was really happening 2 years ago, which is when we made the call. I don't believe anyone has any credibility by making a call after the event has already taken place. There is no credibility in saying, oh yeah, the Vancouver housing market is correcting. Now that you're seeing housing prices in single detached class homes off 30 and 40% some areas. You're too late. You missed that call. You needed to be giving people that advice 2 years ago. Now, what I'll tell you, Jim, is when I had my real estate license for 25 years selling houses to people, it was illegal for me to tell clients how the housing market was going to roll out in the future. The government of Ontario said, when I accept commission earnings, often thousands or tens of thousands of dollars, in exchange for me having that right, I had to be quiet because the government couldn't trust me to give advice that was unbiased when there was that sheer amount of money at risk. I often told my clients, look, I can tell you you can put a $20,000 commission check on a table. If I tell you 99% of the truth, I can have that $20,000. But if I tell you that extra 1%, 100% the truth is, I may risk losing that commission. That $20,000 I may not get to take home to pay for my mortgage, to pay for my family. Governments historically, years and years ago, decided that was too much risk to put on sales reps. You couldn't ask sales reps to tell 100% when 99% of the truth was going to get them the big commission. So they told us to be quiet. Well, as someone who always followed the law, who followed all codes of ethics, who followed every single rule and regulation I was ever put before me in order to sell real estate, that meant I could never tell my clients how the housing market was going to unfold in the months or years to come. I had to sit there and smile, and when they said, is this home worth this amount of money? I talked about it in today's terms. I didn't go on further and say, yeah, but 2 years from now, this house is going to be worth an extra $50,000. Because the government had told me I couldn't give that kind of advice. Your listeners should understand that this same rule and regulation is everywhere in Canada today. Any real estate agent who gives advice, gives forecasts, gives opinions, or guesses about a housing market is breaking provincial trading legislation. They are breaking the law. They are acting unethically.
So legally, a real estate agent isn't allowed to tell the truth.
Legally, the government has said, Jim, that real estate you can't wave $20,000 in front of someone and say 99. If you tell someone 99% of the truth, you can't have this $20,000 check. Or excuse me, if you tell 100% of the truth, you can't have this $20,000 check. But if you tell them 99%, you leave just that 1% off, you can have the check. And how do you leave that 1% off? You keep your mouth shut. You remain silent. You don't tell them, oh, this house that you're buying, actually, this neighborhood has been rezoned by the municipality, and there's a possibility that next door to you, there's a group home that's going to go in. If that group home goes in, your property value probably is going to drop between 10 to 20%, and over the long haul, you're not going to make the same gain as what you would make if you bought a house 2 streets over. And by the way, that house 2 streets over was 2/3 of the price of this one, the one I want to sell you, meaning I'm also going to make 2/3 less commission. You're just asking too much of people, Jim. You're asking too much from commission salespeople to think that they're going to turn their backs on $20,000. It isn't going to happen. The reason why no one in organized real estate or realtors can give the advice, don't buy now, is because if you don't buy, they're going to go bankrupt. their business will collapse. They need sales to take place. Now, if they convince you that the housing prices are dropping at 2%, and they really know housing prices are dropping at 6%, they know you wouldn't really accept a 6% drop, but you accept a 2% drop. They just don't talk about the 6% drop. They let your comments about the 2% drop be the only thing that anybody discusses in that meeting. So when you're hearing people right now, Jim, coming out and now starting to confirm that the Vancouver housing market is correcting, that news is 2 years too late. Thousands and tens of thousands of people purchased homes over the last 2 years because real estate agents need to make commission in order to make their own mortgage payment. The truth of the matter is, when you see a housing market correcting, you tell the public that you see it correcting. You explain to the housing to the public what the consequence of a correcting housing market is. You explain that housing prices are going to drop. And then you get into the bigger discussion of, well, how long are you going to be a homeowner? Because the longer you're going to be a homeowner, you're going to offset a lot or more, all of the loss that you're going to accept when you move in. How much is your rent going to be? So if you weren't to buy this identical house today and you were to rent it instead, how much would it cost you to rent this identical home? Not a house that's lesser, not a house that's better, not a condominium that's lesser. You're going to take a 1-bedroom instead of this house when this house is a 2-bedroom. You need to compare the same variety of apple to the same variety of apple. And that's how you make a decision. The public, I trust the public. I am a home ownership advocate. I believe everybody should own a home who can afford it. That doesn't mean that I can't acknowledge housing prices are correcting, that housing prices are going to rise and fall, that because of the myths about the housing market, what I know is going to happen is going to happen. This is not brain surgery. This is not crystal ball glazing. The reason we called the British Columbia Vancouver housing market in the fall of 2016 was because we were already almost 6 months into a correcting housing market. It had already moved past it being a simple contraction. The reason why in Ontario we told people over in the way back in 2015 that the Ontario market was contracting at the same time the prices were skyrocketing was because we were measuring first-time buyers. And because there weren't enough first-time buyers entering the market, we knew sales at a later date, 2 to 3 years later, were going to fall off. In the meantime, we knew housing prices were going to skyrocket because the share of sales to first-time buyers was declining. You can't go out and find these metrics available anywhere in North America today. You can't find anyone who knows how to calculate the average days of demand. How many buyers are actively in the market, ready, willing, and able to buy today? That metric doesn't exist. They say it's impossible. They say we can't do what we do. And I go back to Vancouver in the fall of 2016. We told you your housing market was correct, moved from contraction to correction. We told you we had already measured a 26% house price decline. It's now 2 years later, and you're seeing that decline. That's because our metrics measure a market 2 years in advance.
We'll have more with Ross Kay right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, mortgage debt today was announced to be growing at its slowest pace, some say, since 2008. Others are saying it goes all the way back to the 80s. What's your opinion on today's latest data?
This would be similar in answer, Jim, to the previous question we just had. What you're reading today about mortgage debt is a consequence of the housing market a year and 2 years earlier. That's how long these changes to mortgage debt and house prices take to show up in the data. So the mere fact that when we read about mortgage debt right now dropping we'll just go back to the 2008 for the sake of the argument. And so the 2008 claims. Well, in 2008, prior to the Great Recession, there was a historic increase in mortgage debt in Canada. None of the metrics that you read, if you go to the Bank of Canada website, Jim, and you pull up their mortgage or the consumer debt and their mortgage debt chart, we don't use those charts because we're measuring new mortgage originations. We don't care about mortgage debt. We care about how much brand new mortgage debt is being booked. That is a calculation that you can come up with if you aggregate all the available data from all the different sources into one metric. You can come up with mortgage originations. So that's what we use. The reason we use mortgage originations, which even that for us is a latent metric of the market, because it's actually measuring closings, the amount of mortgages being placed on the homes that are actually closed, is so that we can go back and check our forecast from a year and 2 years prior. In other words, we're forecasting the market is going to slow down at this pace, and we are forecasting the prices are going to be at this amount of money. When we look at those two numbers, we know there's a certain amount of mortgage debt that has to be booked if that was true. When that mortgage debt isn't booked, that would mean to us that our forecasts were wrong. Now, again, this is not a problem for us because forecasting real estate markets is so easy. We have such a massive amount of lead time that we don't have to worry. So when the bank came out today with their latest mortgage debt, and we watch all these news outlets mentioning about slowing mortgage growth, deleveraging of the Canadian mortgage debt, we're saying we don't know what you guys are talking about. What we're reading today, when we get the data, is new mortgage origination data. We know that new mortgage origination in the month of September, for the sake of the argument, which we will revise later again, by the way, preliminary mortgage data for September is different than what the mortgage data will end up being 2 months from now. That's how, when we're looking at the mortgages, we look at August. Well, in August, our metrics show that mortgage debt, new mortgage originations were 13% less in 2018 for August than they were in August of 2017. We would also say total new mortgage originations are averaging at about a pace of about 23% less than what they were a year ago. These numbers should align with the housing sale data and the new home construction data. You have to aggregate those numbers in order to be able to comment on the mortgage debt. Nobody does that. Like, you've got to shake your head sometimes to understand why we come on the show and we just can't believe what people say. Like, what bank economists, what the academics, what housing analysts, what CMHCs, we just can't understand what they say. Unless you're looking at the resale housing market, the new homes housing market, the new homes condo market, the new homes single detached market. If you're not looking at mortgage debt, if you're not looking at permits, starts, completions, if you're not looking at resale home sales, existing home sales, which are two totally different things, even though they're claimed to be the same, for sale by owners, you can't aggregate all of that information to come up with a conclusion. You have to look at it all to aggregate it all. So I really believe the reason why you can't time a housing market myth exists is because no one has really ever stepped back, Jim, and looked at the entire housing market. We have to look at the rental market. So when people are commenting on the home ownership market, but they're not looking at the rental market at the same time, you can't understand what's really going on, because the rental market impacts the home ownership market. People move from rentals into the owner-occupied houses. New immigrants moving into the country. Here's another one. New immigrants moving into the country. CMHC spent tens of thousands of dollars years ago studying this phenomenon and studying the patterns that new immigrants follow when they move into the country. Yet, when CMHC comments on the housing market today, they don't even reference those old studies. We looked at those old studies decades ago, and then we applied that against what we were seeing in the marketplace as sales reps, high-volume sales reps, and we were trying to see if what CMHC was saying was true about new immigrants. And as it turned out, what CMHC claimed decades ago was the exact thing we were seeing on the ground. So we knew that that was true. You have to apply that against your housing metrics. You have to apply that against your housing intelligence. And when you apply everything that's out there, and there is a mountain of data available out there, it's not just what we collect from real estate agents across Canada. There is a mountain of other available data. When you put that data together, there is such a clear picture of every single penny that's spent in the real estate market, where that penny's going, what impact that penny's going to have, that when a mortgage debt is being bragged about being deleveraged, we would say the biggest fear for Canada right now is if that mortgage debt goes negative. Because all of the data from all of the sources for all of those decades shows if that mortgage debt drops, net wealth of the nation collapses.
We'll have more with Ross Kay right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, you were talking about immigrants to Canada. How important are they to the real estate market? And if we have high immigration, does that mean we're going to see housing prices go up, or at least interest in houses?
Okay, so we need immigrants. We love immigrants. And I stress the word we need them. Our demographics of this country dictate we need immigration to take place. Our successive governments over decades, Jim, have tried to cull parenting out of the Canadian family. They have done nothing to try to improve the situation for families so that Canadians would have a high enough birth rate where immigration was not a big factor. Those days are over with. That's done. That's passé. Immigration is needed. What your listeners can take away from this concept is this. Until more people are dying than are being added to the population, whether it's through immigration or birth, housing prices are going to go up. Now, because of the way housing is bought and sold, it's cyclical. Because of the way houses, mortgage debt is lent, it's cyclical, meaning lending of mortgage debt relies on rising house prices. So you have to have a period of house price growth in order for the banks to lend people money. That's just the way it works. Then you need a period of correction where all the froth or the surpluses, which we call it, gets taken away. But immigration is needed in the country, and our populations are going to grow. Normally, and what would be in the best interest of all of Canadians, was the governments rescind the restrictive policies on growth. Governments say, look, go ahead and build. Build as many single detached house builders as you want to build. We don't care. We're not going to put any limits on the prices you can charge for them. We're not going to put any limits on the number you can build. We're not going to put any limits on anything. If governments did that, we would see a massive explosion in the housing stock in the single detached class of homes, which would in turn keep prices low or drive them lower. Because a home buyer prefers a brand new home versus a resale home. Now, I'm not saying all of them. The vast majority of home buyers prefer the brand new build. It only makes common sense. You have no expenses on a brand new build for the first 15 years that you own it. You don't have to replace the roof in the first 15 years. Starting in 15 years, you may have to replace it. But for the first 15 years of your life living in that home, brand new home, you probably really don't have any maintenance and repair needed. If the government was to say, just build, go ahead, all the builders, build as many, it means that a whole bunch of small builders would start building. Small builders can't build a condominium high-rise. Those are for corporations. Single detached homes, Joe Blow, the contractor, can go out and build 3 houses. Sell them, go build 6. Sell them, go build 12. That's how small builders, that's how Mattamy became Mattamy. That's how the small builders became big, through single detached homes. So a whole bunch of small builders builds competition. Competition reduces price. So not only do you have an improvement of the housing stock taking place, because you're building single detached homes as a population ages, they want to move there. Meaning, when you hit your 40s, you really want to start moving into a single detached home if you have kids. The government can help the affordability issue by allowing this kind of development to take place. Immigrants are going to need houses over their head. Unless the Canadian population is going to decrease, we need more homes. if you want to keep building condo high-rises in downtown Vancouver or downtown Toronto, the overall quality of your housing stock is going to be reduced. It is going to put upward pressure on the higher quality homes. And you'll reach a point where you have in Vancouver where the imbalance is not sustainable by remediating your housing stock right now. You're going to be 10 to 15 years if there was a massive remediation in your housing stock to take place starting today before the affordability issue was done. That doesn't mean you are not having a housing correction in Vancouver and one in Ontario here. That does not mean these housing corrections are not going to happen. They are. People are going to be wiped out financially for the next 20, 25 years before they recover. That is simply the truth. Immigrants are telling our politicians, we need to grow the housing stock. We need to allow builders to build single detached homes. Maybe it doesn't have to be 50-foot frontage lots. Maybe it's 32-foot frontage lots. You certainly need to be building lots where you can put a garden in the backyard, because that's another way for families. I know it's out of popularity, but if a family wants to save money, a garden in the backyard is a great way to do so. A garden happens to improve the health of the owners of the family because they go out and work in the garden. They're healthier. There are lots of positive aspects about building out this way. But when governments say, no, you can't build in the green belt because we want to maintain this field, then what they're saying to the people is, we are going to continue to put you into a denser living environment on more concrete. You are not going to be able to move your way through the property ladder. We are going to constrain your life. We are going to, through this type of development, we are going to ask you to fuel more of your money into spending instead of savings, which is what a single detached house does. It makes you save your earnings instead of spending them. And new immigrants, Jim, the irony of all this conversation is this. New immigrants move through the property ladder very quickly once they start. They make the compromises needed because they're coming to this great country. They're seeing Canada through the eyes of someone who lived in a country that wasn't so great. When their kids need health care, the Canadian infrastructure takes care of their kids. Even if they live down in the United States, the richest nation in the world, when your kids are sick in the States, if you're not paying out of your monthly paycheck health insurance, you're in big trouble. When people compare the United States and Canada housing markets, we say you can't compare them because in Canada, homeowners don't have to worry about losing their house because someone in their family gets sick, seriously sick. So immigrants are needed in this country. It means that we have to build the housing stock to accommodate our growing population. And regardless of what anyone wants to pretend otherwise, whether it be politician or environmentalist, unless you allow the footprint of your population to expand responsibly and ethically in a manner that promotes green living. I mean, we can just put we can put solar panels on every single detached home built in Canada if you're worried about the green movement. Unless they do that, unless they accept that, they are forcing Canadians to live a constrained life going forward. Future generations will not be allowed to avail themselves of the beautiful and wonderful life Canada has provided for the generations before.
Ross, has the price differential spread between condos and single detached in Toronto decreased, and should trade-up buyers be looking at this as a great opportunity?
I think this has got to do with a Toronto realtor came out was in the Globe in the weekend and made this commentary. This Toronto realtor happens to be a former accountant, which to me, I mean, I don't know what the guy's thinking. Look at the price differential changes. The quality of condominium being sold in 2018 is not the same as the quality of condominium being sold in 2015 or 2013. And as such, you are not measuring, when you're looking at the average price or the benchmark price, you are not measuring the same condo. You are measuring a higher quality condo in 2018. At the same time, the single detached home you're measuring is dropping in quality because the houses, single detached homes that are being purchased in Toronto today are the ones are of a lower quality, a lower price. So your spread between those two categories of homes naturally gets closer. It has nothing to do with the spread between the overall condo stock and the overall single detached stock.
So, Ross, basically what you're saying is you'd be giving up a really nice condo with all the mod cons in it for a crappy house that's falling apart.
Yes, exactly. And that's what people have done for decades after decade after decade. That's how they move. They buy the young couple who owns a condo, sells it, buys a fixer-upper, improves the fixer-upper, and they move on to a more expensive house again. That's how it works. And what this realtor was saying was, he was saying, oh no, the spread's gotten closer. No, the spread hasn't gotten closer for the exact same properties. For the exact same properties, the percentage difference between the two has remained identical. The only thing that's gotten closer is the condos are a higher quality, the houses are a lower quality that are being purchased, and that skews average selling price and benchmark price. Your listeners, what I hope they understand is this. When you're out there spending hundreds of thousands of dollars on your home, you need to understand what you're buying at this moment in time and what that house is going to be forecast to be worth years later. In other words, am I buying at a time right now where I am buying the spread between a low quality condo and a high quality single detached home is the smallest? Or am I buying when it's a high quality condo and a low quality single detached that looks the smallest? It's hiding what's really going on with prices underneath. Because that differential, Jim, can be between 20 and 30% within any 5 to 7 year period. 20 to 30%. In Canada, that equates to about $150,000. $150,000, which you will then mortgage over 25 years in a rising interest rate environment. So be wary of these people who go in the newspaper and make, in our opinion, totally nonsense commentary about different categories of homes at different moments in time in the trading cycle.
Ross, a survey claimed 1 in 3 Canadian families fear bankruptcy as interest rates rise. Last week, the Bank of Canada raised interest rates anyway and took away the wordage that said they would be cautious about it. Now it seems like it's going to be a regular event. What's your insight on this?
My insight is this. We went through, meaning my family, my parents, because I didn't even start real estate until the late 80s, interest rates for Canadian homeowners hitting 20%. 20% interest rate in the early 1980s was the maximum mortgage interest rate. Even then, people were not regularly losing their houses through bankruptcy because of the increase in interest rates that reached 20%. What a homeowner is able to do is the homeowner is able to go back into a bank, make terms and conditions with the bank where they'll keep making the same mortgage payment or a little bit more and they'll be able to survive. They'll weather the change in interest rates. Now, we're different today than they were in the 80s, or when I was selling, Jim, in the late 80s, where I was dealing with 13.75% mortgage rates for my clients. When mortgage rates hit 9.95%, we were jumping through the roof in the real estate office. Like, we were ecstatic. Our clients were going to get mortgages below 10%. Today, we're still looking at about 3.5%, more or less, for a 5-year term mortgage. People are paying down their mortgages so rapidly right now that 5 years from now, when they go to renew and interest rates are higher, the banks are going to allow them to be able to change their mortgage term, amortization, lengthen it back out again, if necessary. So this bankruptcy fear is not really rooted in homeowners. The bankruptcy fear, which is the Bank of Canada has mistakenly, in our opinion, estimated here, is really in the rental market. Because in the rental market, these are people who, if you look at the percentile of income earners, and how it breaks down, and you look at the home ownership rates in Canada and how it breaks down, especially with provincial variances, you're looking at tenants who are those who are susceptible to bankruptcy. It is a very, 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 very minute few in the home ownership market that are susceptible to this, because those people each month are paying down their mortgage. One of the reasons, the number one product, and so here's some free advice to any listener who's still listening to the show at this late today, Jim. Readvanceable mortgages are a homeowner's best friend. A readvanceable mortgage is the type of mortgage almost every Canadian homeowner should always have. A readvanceable mortgage allows you to pay down your mortgage debt, and then in the future, if you need to access those savings, withdraw some of them. The beautiful thing about a readvanceable mortgage that is used prudently under the supervision and guidance of someone who is warning you about the pitfalls of borrowing on a readvanceable mortgage is that you're building in protection for your family. You're building in protection for your home ownership asset. You're building in protection against job loss, illness, by having that readvanceable mortgage. Now, right now, I think there's 7 or 8 products out there that are available as readvanceable mortgages. I'm not telling you should take any of them. What I'm telling you is that you probably should be looking at the rates that they're offering, and then deciding whether or not that is in your best interest. Readvanceable mortgages are the friend of the homeowner. And readvanceable mortgages eliminates the fear of bankruptcy because of rising interest rates. Canadians have followed this pattern, Jim, for 40 years. If my parents could get homeowners to navigate 20% interest rates, 20% mortgage rates, we certainly can get people to navigate 6%.
Ross, thank you so much for being on the show.
Hey, thanks, Jeff.
My guest has been Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.